you could look at any isolated move in gold and silver and going up and say, oh, the world's waking up now. I've been in this for since 2008 and watching the moves in gold and silver, and you think that at every type, oh, the world's going to understand now. They're understand now. I don't think we're there yet. What I'm looking for is something close to 1980, where we had a 100% backing of all the Fed's liabilities by gold. So we're headed to somewhere around 30, 40, 50,000, depending on how big the Fed's balance sheet gets. When we get there, I know the world has woken up, and that's the only way to go. There's nowhere else to go.
Over the year to date, gold has shot the moon, rising from around $2,077 an ounce to a new record high of $2,431.55 an ounce this month. That's a gain worth a healthy 17%. Rafi Farber, the Endgame investor, envisions a future where declining Federal Reserve assets compel a return to gold as the sole support for the dollar. This shift, he suggests, could propel gold's value towards $50,000 per ounce, signifying a global awakening to the importance of precious metals as a monetary standard. Historically, gold and silver have served as reliable indicators of market sentiment during periods of crisis. The 1970s and early 1980s are prime examples of these metals reaching unprecedented highs. This era was characterized by severe geopolitical and economic disruptions. These include the oil embargo of 1973 and the collapse of the Bretton Woods system in 1971. These events spurred rampant inflation and eroded trust in fiat currencies. This scenario prompted investors to flock to gold and silver as more stable stores of value. In Farber's forward-looking analysis, hyperinflationary spirals lead to a collapse of currencies, eventually reverting to the base currency, such as the US dollar. However, he suggests that if even the dollar succumbs, there will be a need to return to gold and silver as the sole stable exchange mediums. The potential near-term weakening of the US dollar is primarily attributed to the Federal Reserve's implementation of accommodative monetary policies. The US is expected to lead the way and cut interest rates sooner than other Western countries, and this could potentially diminish the allure of the dollar. Lowering interest rates in the US, in contrast to other developed markets, tends to decrease the dollar's value as it may encourage investors to seek higher returns elsewhere. Despite the reassurances of stability, Farber discerns a recurring pattern of crises, such as the regional banking crisis in March 2023 and the repo rate surge in September 2019. He foresees a systemic collapse, envisioning gold and silver as the inevitable default currencies for transactions. Now we present the clips of Rafi Farber's insights from his recent interview with Ron's Basement. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Endgame is the end of gold and silver derivatives, at least for this round. I see all of Extra's pyramid starts with gold and silver. That's how the dollar was born. It was born as both a gold and a silver derivative, right? Until 1873, when it became a gold derivative exclusively, which itself was a transfer of wealth from silver holders to gold holders, and of course the silver holders are the middle class, and gold holders are the upper class, the rich. So the end game is the end of all those derivatives of gold and silver, which begins with the dollar, and then goes to bonds, and then goes to equities, and all the way up to cryptocurrencies. The end of it all. If you look at any hyperinflationary country, in the last, let's say, 150 years or so, they all their currency dies, and they go back down the pyramid into inevitably the US dollar, because the dollar is the base currency, but that's still a dollar. It's still a gold derivative. So the question is, what happens when the dollar itself hyperinflates? You can't go back to a currency. There's no currency to go back to. So you have to go back to gold and silver. So for a brief period of time, we will be trading gold and silver coins for our goods and services until we are able to create another derivative system. Hopefully this time a more honest one. I don't have anything against derivatives. I have a problem with derivatives that are lying about what they represent. First of all, I don't think that the dollar, in my way of thinking at least, the dollar is not based on nothing. It's based on the assets that the Federal Reserve holds. Like the Federal Reserve's balance sheet is literally the other side of the dollar. So the dollar is backed by mostly debt, about 93% debt, and maybe like 7% gold, assuming they have it. So the end game looks like the assets on the Federal Reserve's balance sheet falling to nothing because they can't be paid, because the debt can't be paid anymore. And then what has to happen is that the remaining assets on the Fed's balance sheet, being the gold that's still there, that compensates for that lost value. So then what you end up having is a 100% backing of the dollar by the remaining gold on the Fed's balance sheet. So gold would have to go to something like $40,000-$50,000 an ounce. And there's really no difference between that and saying it goes back down to 35 and everything else deflates. It's the same thing in the end. I mean, we saw one in March of 2023, right, the regional banking crisis. That was the brick falling out. And before that, the repocalypse, that was in September 2019 when repo rates went to like 10%. That was another brick falling out, and then they rebuild it. So in the end, I do see the entire thing collapsing in terms of gold and silver. And then it's not like everything becomes worthless. It's that the dollar becomes worthless. And then all of the stuff on top of the pyramid, on top of gold and silver, becomes denominated in gold and silver ounces just by force. Mm-hmm. It's not like there's not going to be, a meeting in Congress or in any central, elite institution, whatever three-letter acronym they have. It's not going to be them deciding, okay, well, I guess it didn't work. We have to go back onto gold. They're just going to be running for their lives. And then the market will take us back to gold on a 100% basis. This is exactly what we saw in 1980. It's not like this hasn't happened before. It happened in 1980 when the amount of when the liabilities on the Fed's balance sheet were back to 130% by the gold on the Fed's balance sheet, because gold in 1980 was so high that the rest of that just the gold on the Fed's balance sheet backed all of the dollars that were in circulation by gold. That is a gold standard, right? And we're still on a gold standard because you can still go to a coin shop and you can get gold if you give them $2,500. Like, so it's still backed by gold. The minute it isn't, the minute you go to a coin shop and you hand them a big wad of cash and they're like, sorry, we don't take dollars anymore. That's it. Doesn't matter how much you give us. That's the end of the gold standard. And that's the end of the gold standard is really the beginning of it, because then we go back to gold itself, right? We don't go back to dollars anymore. It's dead.
Despite the current calmness, Rafi Farber foresees a looming risk of deflationary panic due to the Federal Reserve's restrained money printing since 2021. He anticipates a scenario akin to the repo apocalypse of 2019, potentially driving gold and silver prices to new heights. Since the onset of the COVID pandemic, the Federal Reserve balance sheet has soared by over 100%, while M2 money supply has surged nearly 39%. Despite a slight decrease in recent tightening efforts, U.S. debt has skyrocketed by 55%, surpassing any reductions in M2. This surge in debt and money supply suggests looming economic challenges and the potential for increased inflation. While Farber envisions a future where the Federal Reserve's increasing reliance on gold to back its liabilities could lead to a narrowing of the gold-to-silver ratio. This, he suggests, might offer a unique chance to utilize silver for acquiring tangible assets, such as houses at favorable prices. Let's get back to the interview.
I don't know. When people say it feels different this time, it's usually feeding into their own emotions and reflecting back. It's hard to remember exactly what you felt like during the last gold rally. What was anybody really feeling like in 2011? What were people really feeling like in 2020, or August 2020, when gold passed $2,000 for the first time? It certainly felt apocalyptic, like we were losing our minds, locking down the entire planet, for reasons that I don't want to go into. And that was one of the most terrifying times of my life. I fought that in very risky ways, and I never want to go back there again. But now, there are bombs falling fairly close to me, so there's that. But at least those risks I understand. Like, I understand the risk of bombs falling. Like, I get how those are harmful. But the whole medical thing that happened in 2020, I didn't understand what was going on there, other than just like scary stuff. So it does. Even if it feels different this time, it's best not to indulge in those emotions. Oh, it feels different this time, therefore I'm going to go all in. I still think ahead of us is going to be one more deflationary panic, because the Fed still isn't printing money, and they haven't been printing money since 2021. So the money supply, meaning the dollar supply, has been falling since 2021. They're going into more and more and more debt with a smaller and smaller and smaller monetary base since 2020. That's them shrinking their balance sheet. So eventually, a smaller monetary base and more debt, eventually you're going to hit some kind of deflationary crash like we saw in 2019 with the apocalypse, and that is going to cause the Fed to print something like $5-6 trillion in a few days. It's going to be something like that, and that I think is going to be when gold and silver go vertical. I try not to time that. I don't encourage people to try to wait for that to happen, because when it does happen, it's going to freak everybody out. Just like in 2020 when when gold fell from about, what was it, 1800 to 1450. It felt like it was over for gold. Silver fell to like $11 or something. Everyone was panicking, but really, gold prices were falling the least of any other prices, excluding consumer prices. Right? They were falling the least of any other asset, and it was that point that gold was at its high in real terms, all-time high, that we haven't even gotten close to. So just be careful. We should be having one more round of deflationary panic at some point soon. And then once the Fed responds to that, it should be over in a few months. Once we have the Fed's liabilities on its balance sheet backed close to 100% by gold, which is what happened in 1980, it went even higher than that, to 130% for a day. I wouldn't wait for 130% and then buy a house. Like, as we head towards 100% coverage of the Fed's liabilities with gold, then the gold to silver ratio should descend near 20-1, 15-1. Once we have that, let's say silver at 20-1, and the Fed's balance sheet backed by say 80-90% by gold, then I think you can. Then I think it's time to buy stuff with your silver. Just buy whatever you can, whatever is being offered. It's not the fact that silver is so valuable all of a sudden that everybody wants silver and therefore they'll be willing to sell a house to you. It's the fact is that once everyone who has dollars and all these derivatives of gold and silver, and they realize that they're actually worthless, what they have to do in order to reestablish a division of labor is offer their real assets to you at such spectacular rates to real money, so that they have some money so they can plug back into the division of labor, because otherwise there isn't one.
Although the returns of precious metals markets are not guaranteed, gold and silver have plenty of history on their side to suggest that they will continue to perform an essential role in protecting investors from the ravages of inflation. Looking at the economic uncertainties ahead, how do you think precious metals will fare? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.